This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Larry Pesavento for TFNN. Sorry for the delay, but I'm having some serious technical difficulties with Skype. It's not working. I hope everything's okay there at TFNN. We'll see if I can show you the chart here. This was our best trade of the day. We ended up making about, you can see the ABCD pattern that we had here on the Dow E-mini. We sold it at $41,299. We said to cover it if it made a new low. It did, which was that was a $2,000 move. As we were looking at this, when the trade started, we started to look at it from a standpoint of what the highs were from each high. And as you can see, each one of those lined up very, very closely. And as we were looking at the bottom here, Sarah walked into the room and said, "Oh, there's a 3-jar. We should buy it." And certainly it's had a nice rally since that time. But anyway, that's what we did. We also had a really nice trade in the Treasury bonds, which was really good. But I wanted to focus on just a few things here today. By the way, Monday, we're going to have a special guest. Stan Harley's going to be on Tuesday. Wednesday is Grace Morris, and Norm Winsky will be on Thursday next week. But let's take a look here. Yesterday, oh dear, that's the wrong one. I lost it. Sorry about that, folks. Let's move on. There's what I want to show you. Here are the standard deviations that we had when the market was making a high. Yesterday, as you can see here, it had the big sell-off from the standard deviations, which was good. But I wanted to share with you this picture right here. This is a picture of the 2008 market. You notice it had a high on July the 17th. The market had a big break and then went up and made a new high here in October before crashing down. Look what we're doing so far here, folks. This is with interest rates cuts. See, what people don't seem to understand is the interest rate cuts, they can cut it all they want. The problem is the bond market. See, the bond market has to go down in order to absorb this interest rates that are coming in because they don't have the money to pay it back. So there's only one way you can default, and that is to let the price of bonds keep going lower and lower. Yeah, the interest rates on them the same, but the thing is still going lower and lower. This is what we're basically looking at right here. So watch what happens when the Fed does drop interest rates. It'll probably make the stocks go down. That's what happened in 2007, and maybe it'll happen in 2024. Maybe it won't, okay? Something we're watching. All right, let's move up here. I want to show you the trade of the day that we liked, which we thought was by far the best trade of the day, which was the British pound. Let me get this up here. This had everything that I loved, folks. I mean, this just showed you how important it is to pay attention to what's going on. There it is right there, folks. We were looking at it right here. We had a stop in, of course, and we got stopped out. We lost about $300 on this trade. We also lost $400 on a E-mini Dow Jones trade. We sold a 382 and it didn't work, so we lost 400 there. So we were down about 700. But then we made on the Dow Jones, we did make 4 points, which was 2,000. Plus, we had a really nice trade in the Treasury bond that is continuing to work. I'll bring this up here, and you see here we had this big ABCD up here, and we got filled here at 28, and now we're down here. We're down about $400 now in our favor. We have our stop here at break even, so it was a pretty good day, overall. But this is what we're paying attention to as we're watching. The thing that's important, folks, is when I bring this chart of the Dow Jones up again, I want you to notice something because it's really quite amazing. Believe it or not, folks, from the time when the Fed started to talk here at 10 o'clock to where we are right now, we've had a move of 300 up, 200 down, 300 up, and 400 down. That's 1,100 point swing in the Dow, and it's damn near unchanged on the day. Folks, this is a lot of distribution. I don't know what it means, but my goodness, that's a huge amount of movement. And the Dow Jones made a new high from July 31st. So it took out the high of July 31st, which has been an intermediate high. Not the contract high, but it's definitely done that. But we're not going to find out whether it's going to remain that way or not. So that's what we're watching here. So let's take a look at a couple others that we want to be looking at here. Remember this Japanese yen trade that we had? It keeps on giving dividends. Get this up here. We'll get up here to see it here. This was another one that we had on today. We didn't, by the time we got hooked up, we had already made the 382 retracement here, and then it's still heading down. There was the first 382 retracement. Okay, this is a big thing, folks. What's happening here? You have another 382 retracement here, and we're still heading lower. Our minimum objective here is this one right here. That's 143. That's down another 150 points. And we covered this in the video last night. There's your ABCD leg right here. And we should get right down to about this level here in the next week. Of course, this is Friday, so there's not much going on. We're making new lows on the week. That's telling us that we are starting to move a little lower to the downside. So a lot of volatility, folks, a lot of volatility. And we're going to find out what it means here in just a little bit, but it's doing really crazy stuff. Now, we had one other trade that didn't quite turn out the way we wanted to because it hasn't reached the level yet, and this is the natural gas. And this is a really nice pattern, folks, because I'm going to show you on the daily chart. We started with the daily, then we went down to the 60-minute, but here's the daily. As we bring this up here, you can see there's the pattern that we're looking at. We're trying to be a buyer here at the 1.618 expansion of this swing right here, all right? That makes this a Gartley pattern, perfect, as a matter of fact, from your ABCD leg right down, and there's your 1.618 expansion there at 1.99. The stop is going to be right here, 1.94. You're down 1, 2, 3, 4 days. You look tomorrow, might not even this week, but watch it Monday. This is a very, very valid pattern that should be pretty good. So those were some of the ones that we thought that the 3 hours went so fast, it was like a heartbeat. We had 4 trades, we had 2 losers, and then we had 2 nice winners, and that made a net profit on the day of a little over $1,200. And we're going to see how we do the next time. But, it started off kind of rocky because of that British pound trade. That had everything perfect. And then when he opened his mouth, Chairman Powell, he said, these guys at TFNN are short the pound. Let's give them a lesson in humility. And by golly, humility was right behind us. We got stuffed out of that so fast it was like it didn't even exist. But that's what trading's all about, folks. Some days it's chicken salad. Some days it's chicken poop. It depends on how you mix it. And always remember, you've got to be alert to what the values are. We're still having huge swings here, folks. Look at this. This is the Dow Jones. Just from the high we made just a little while ago, we came down and made a new low. You can see we made a new low on the day on this run right here. There was the previous low for Friday, and then we made a new low, and we're rallying back. We're already above the 61% retracement again. We might make a third drive to the high here. Look, see, we're already up here, 200 handles from the bottom. This is still a very, very strong market. So we'll take a break. We'll be right back. 877-927-6648.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, I'll bring up the chart. This is just a 1 minute on the Dow Jones, but we were watching it as when it was happening here at 12:45. Sarah happened to be standing behind us here, and she said, oh, my goodness. She said, look, there's a little 3 drive, and there it was right there, drive 1, drive 2, drive 3, and we rallied another 200 points. So this is huge, huge volatility in the indices today, folks. I mean, look at this move here. You've got 400 points, 300 points to the upside. 200 points to the downside, that's 500, okay? And then 300 up, that's 800, okay? And then down 400, that's 1,200. And then up another 200. We've moved 1,300 Dow points today, folks. Now, you don't see that if you look at the chart. All you're looking at is this, these big lines, but this is exactly what's happened. It's moved that many points up and down. So here's when the chairman came on right here. Then it comes up, it pulls down to the 786 and up. Here was the one that was the one that set up our winning trade was right here, because we said, watch for that first, after this bottom came in, we sold the 382. That was a losing trade right here. And then when it came here, we said, watch for the 382 bottom. And we mark it here from the high down up to the low. And there it was right there, right on the money. And they said, oh, now what we've got to do is we started to do the A, B, C, D patterns right here. And in the matter of about 10 minutes, the market had moved 200 Dow points, and we were setting exactly at our sell point, which was 11299. The high was 11307, and then we covered it down here on the 3 drive to a bottom pattern, which we said that it will probably make new lows on the day, and that's exactly what it did here. This one tells us what the previous low of the day was, and you notice how we've taken it out, and now we're still rallying. We're up to the 61% retracement, it looks like. Let's just double check it here. But this is tremendous volatility, and we still got 2.5 hours to go in the market, folks. This is a big deal. We're already let's just clean this out a little bit so we can see it a little better. Yeah, we're at the 61% retracement here. And you'll see there's where we are. We just made a 61% retracement. No ABCD, it's straight up 250 Dow points, still going higher. So that's it. And we also had a bond trade that seems to be, it is working nicely. It's got about $500 in it, so that's okay. Now we're looking at the NASDAQ here. The NASDAQ did not make a new high today when the rest did. But then again, you can see there's all the others made a new high. We did not in the NASDAQ. All it was able to do was to go up and stop almost exactly at the 7-8% retracement. Then we pulled back down again, and we're just bouncing around in here. This is weaker than most of the market, you see. Now, if we take a look at the Russell, which is the equivalent of pork bellies on steroids, this is the 30-minute chart. You talk about a market that has just been explosive to the upside. There it is. I mean, there's today's action. There's where we were last night. Here's when the Fed chairman spoke, and boom, away that it went. If we look at this on the long-term daily, you'll see there's where we are. You'll be able to quickly see that we're almost at a 78% retracement of the whole move down. We're just a very, very short 25 handles, and we're still moving higher on the day with no sell-off. With the Dow doing all that swings, the Russell did nothing. This is a sign of strength. In fact, we pointed that out. There was your low, there was your high, there was your 382 pullback at 11 o'clock. We stopped there, and then we're still going higher. Remember, the Dow Jones came down and took out these lows, because that's only 30 stocks. With the Russell, it's about 1,900, the Russell 2000. So big markets, lots of volatility. You got to follow them all if you're going to get it right, and sometimes you get it right, sometimes you don't. Now, here's one which should have been our trade of the day, but I warned people it's probably not going to happen, and that was here in the crude oil. We were looking for the crude oil pull here around the 38% retracement right here. But what I did was I looked at the wrong one. If I had looked at this low right here, and that was a judgment call on my part, from this low up to the high, it actually made the 382 twice. See, if you take this low, it didn't make it, but if you took this low, you did. How do? You got to do them both, folks, because I don't know which one's right. They're so close, but, sometimes you go to the circus and you walk home without a Cupid doll, and that's one of those times that we missed. We didn't get it in, but we went and made a huge run here, well over $2. This was one of our favorite trades, if you remember from the show yesterday, the fact that we took out the previous day's low by just 10 points right here, just 10 points, and then exploded to the upside. This is power, folks. I mean, this is powerful. Just look at the 382. We probably made it on the first day, or it might be close to it. We're already through it. It's already going higher. Remember, when it gets this quickly, this fast, that tells you it wants to go higher. So I'd be really careful trying to short that up in this area right here where we are. I'm very serious about that one. All right, let's move on to Apple. Apple has had a very unusual day. We watched that from a day trading perspective, and just give me a second here. We'll get up here with the 8-minute chart, and you'll be able to see the beautiful ABCD pattern that we had completing. This is while we were on the air today. We didn't do any trading in it, but the ABCD measured to 28.49. The high was 28.21, so misses it by 20 cents. So somewhere around 228 would have been the sale, and it broke 4 points, a considerable amount. And if you look to see where that low was from the previous low back in here, where did it stop? Just a shade above the 61% retracement, and now we're having another good rally back, and we should check that with new lows. We want to see what the 382 will be, and we are trading above it right now, so it looks like that Apple wants to rally into the close based on what we're watching right here. Now, on a program note, next week on Tuesday we have Stan Harley, Wednesday Great Morris, Thursday is Norm Winsky, and Friday I'm hoping for Joe DiNapoli, but he hasn't gotten back with me yet, so we're trying to get him on the air. But we should have a fun week. But we're going to have incredible volatility in these markets, folks. So just get ready. It's just beginning. When you see 1,300 points moves in the Dow and it's up and down, that's a big deal, folks. It frankly is, and we got to pay close attention to it because it's not something that happens, out of the blue. It's just the way it is. Now, looking at these look at this chart here in the Dow Jones, in the E-mini here today, when we were making our low here a little while ago, when we were seeing the 3 drive on the NASDAQ, on the YM, you can see we're making a perfect ABCD here at 07. The low came in at 03. So now we're having a pretty good rally back. And as we see this, the last time we rallied on this 8-minute chart, we rallied 1, 2, 3, 4, 5, 6, 7, 8 bars. This one was 1, 2, 3, 4, 5, 6, 7, 8, 9 bars. So these rallies are very similar. And if you look at them from a technical standpoint, you'll see that they're coming in just about the right one. That move right there should equal this one right here. So it's very close. So let's take a break and we'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
There's no better time than now to sign up for Live Trading Fridays. Why is that? That's because the next trading session, this Friday, August 23rd, coincides with Jerome Powell's Jackson Hole speech. Chairman Powell's comments have the power to greatly move the market, and Larry is ready to capture those gains on the moves. Use code LARRYAUG24 at checkout to save $50 off your first month. See you there, Tigers.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I posted the chart here at the Dow E-mini, and you can see we've made new highs on the week up here. The high on the contract is 57.21. We're only 100 handles away. And the way it's jumping around today, just looking at this on a smaller time frame, you can see we've been all over the map with ABCDs and everything. We could easily go up and make new highs. People ask me, Do I think this is the beginning of a new leg in the bull market? Folks, this leg started on March the 5th of 2009, and I don't know when it's going to top. I thought it topped on July 17th, but we've made new highs in the stock market for the trading New York Stock Exchange Index. The others have not. I have never seen that happen before. To me, that would be a warning sign from distribution, but frankly, I'm not even sure of that. It's just such an unusual event that you have to respect it. That's for sure. One thing I'd like for you to do for me this weekend is if you see somebody, I don't care what they're trying to do, is to borrow something, it's for food or whatever it happens to be. I don't like cigarettes or alcohol, but try to help your neighbors the best you can. Some people are really hurting. They have no control over some of that, and it's just a few dollars out of your pocket, and it might make them feel a whole lot better. So try to share the wealth if you can, and that's certainly appreciated. I certainly do, because someday, who knows, there but for the grace of God go I, and I don't want to be in that position anymore. Of course, I'm at near the 9th furlong hole flag here, so I'm not too much worried about that. Anyway, thanks for joining us. Thanks for joining us with the live trading. If you did today, we pulled it out of the hat there at the very end, which was, well, a little bit of luck, a little bit of opportunity. So live every day in an attitude of gratitude, and may God bless. And we'll see you on the flip side on Monday.